Good morning, everybody. It's Thursday, November 9th, 5:27 a.m. Central Time. Grain markets are lower this morning. December corn futures down 2 3/4 at 473 and a quarter. January soybeans down 1 at 1364 and 3/4. December Chicago wheat down 8 at 584 and a quarter. December Kansas City wheat down 5 3/4 at 649 and a quarter. December spring wheat down 4 3/4 at 730 and 3/4. We had some news out of the Black Sea yesterday.
We sure did. On Wednesday, a Liberian civilian vessel was struck by a Russian missile at a Black Sea port near Odessa. One person was killed and four were injured in the attack. The vessel was slated to transport iron ore to China. Since Russia exited the Black Sea grain deal back in July, Moscow has carried out 21 targeted attacks on Ukrainian port infrastructure. Wheat futures rallied sharply on the news yesterday.
Yeah, so the news puts into question the validity, I guess, of this new grain corridor, or just new shipping corridor, which Russia is not really on board with. So you had a sharp rally in wheat yesterday. HRW futures up 22 cents, SRW up 22, spring wheat was up 11. I don't know if this is just going to be a one and done deal in regard to the rally. I will say this: wheat futures have been down in the dumps, oversold. Large speculators are heavily short. I think we've got a record fund short in the spring wheat market, heavy short in SRW. So is this a one and done deal or a catalyst for a larger recovery? I'd love to see a larger recovery here. Wheat price has been under a lot of pressure. They've not given the wheat producer very much to work with here. You don't want to see these attacks and doing the news every day, like headlines like this. This is kind of depressing. Like you talk about it, oh,
Mhm.
somebody died, and we talk about it, and we're interested in wheat prices. The whole thing, these wars are not fun to talk about. But in any case, yeah, we'd love to see some higher wheat prices, but at what expense, is always the question.
USDA reported sizable flash sales of U.S. soybeans on Wednesday. Yesterday, USDA reported private sales of 33 million bushels of soybeans, of U.S. soybeans, the largest single day soybean sales since July. Of the total soybean sales, China purchased 16 million bushels. The remaining 18 million bushels were sold to unknown destinations, which oftentimes means Chinese buyers. The sales come at a time when Brazil's soybean crop is suffering from unfavorable weather. Dry conditions in Brazil have caused issues for grain shipments on rivers in northern Brazil. Also on Wednesday, U.S. exporters sold 11 million bushels of corn to Mexico for delivery during the current marketing year.
The rumors were true. We talked about this yesterday. We knew that this was coming. This was not a surprise. The amount, so your total was what, 909,000. I
Mhm.
guess depending on how you read the Reuters piece that reported this prior to the official announcement, maybe this was slightly better than expected. The Reuters piece that was printed on what would have been Tuesday, I guess, indicated that it was going to be a 600,000 metric ton sale, but then went on to say that it was like in total maybe up to 25 cargoes. So I think that this is very much within the realm of expectations. Even with these sales, we're still not where we need to be in terms of export sales as it relates to USDA projections. So we need to see more of this. Remember, guys, these sales will not be included in today's weekly export sales report. They'll be included next week.
Soybean futures rejected key technical resistance on Wednesday. The most heavily traded January 24 contract ran stops above a multi-month trend line for 2 consecutive days, but has been unable to close above it. Buyers chased the China headlines along with a less than ideal Brazilian weather situation. The buying and subsequent selling occurred on larger trading volumes.
People watch these trend lines. Large traders watch these trend lines. People watch them, and that's why they matter. So you went up, you ran some stops above that trend line, rejected it 2 consecutive days, and now you're back below it. If you're a bull in the soybean market, you would very much like to see a trade up and above that like 1380 level January futures and see it stick. You want a sustained push up above those levels. Guys, there will never be a trade recommendation here. There has never been a trade recommendation here. In fact, here's a recommendation. 99% of you guys have no business trading futures or options. That goes for myself as well. Those who should be trading futures and options include those with unlimited resources as it relates to money, or those who need to hedge physical production or end users, that sort of thing. Don't speculate in the futures markets, guys.
So, if you guys have not already checked out our premium content, you need to do so. Joe, can you tell me about the video you put together with Brian Split yesterday?
Brian was on yesterday. We talked about charts, talked about the soybean situation in particular. We also talked about meal. We talked about soybean oil, talked about the cattle setup from a technical standpoint, which is probably one of the most interesting ones out there. If you guys want to see the premium stuff, go to standardgrain.com, sign up this morning. This is a $50 per month subscription. You can cancel at any time, no other fee, no other obligation. Nobody will try to sell you anything else. As I mentioned early in the week, guys, this is the best way to support what we're doing here. YouTube pays us next to nothing. The podcast pays us $0 exactly. So this is the only way we're able to do this. This is independent media. We have no sponsors. We are self-sponsored. There's no corporate backing here. This is just a small-time operation. We're doing this all through premium subs. So if you are a premium sub, thank you. You're keeping us in business here. You allow us to do this every day. And if you're not, you should consider a subscription. Again, $50 a month. It takes like a minute to sign up, guys. Check that out this morning.
USDA will release its monthly crop production and WASDE report here this morning at 11 Central Time. Ahead of the report, traders expect a marginal increase to the 2023 U.S. corn yield estimate and an unchanged U.S. soybean yield estimate. Traders will also keep an eye on the demand side of the balance sheets in addition to any global changes.
The pre-report estimates are extremely unexciting. The trade expects no major changes. I personally, and I know this is not a popular opinion, I would not be surprised to see a higher corn yield number and maybe even a higher soybean yield number. I don't like to talk about yield reports here. People get too worked up and excited and triggered, as I said yesterday. But guys, the yields in some of these areas that had the worst of the worst drought were absolutely phenomenal given the situation. So I don't know. Is the crop actually better than expected? I don't really know. Maybe we'll find out today. I know everybody's got different opinions. I know if you had a shit crop in your backyard, you don't like to hear that. But I just feel like from what I've heard, and I hear a lot, that the crop was, I think yields were pleasantly surprising for a lot of people. You'll get to carry out numbers. There's nothing overly exciting here in terms of the projections. But I guess that's how you get a surprise. You go in looking for a dud, something changes. Maybe that's how surprises occur.
Mortgage rates last week recorded their largest one-week decline in more than a year. The average rate for a 30-year fixed-rate mortgage fell to 7.71%, down from 7.86%. As a result, total mortgage applications increased last week by 2.5% compared to the previous week. Applications, however, are still 20% lower than last year at this time. The decline in mortgage rates was attributed to the Fed holding rates steady and data indicating a cooling job market.
The question here, bigger picture, is have interest rates topped? And for the moment, it appears as if they have topped. Yield on the 30-year peaked at like 5.2% just before the Fed's meeting. I believe it was that last week. And then you look at the bond market, big picture. Yeah, the 40-year bull run in bonds is over, but we may have found a short-term bottom here. I was looking at the CME Fed tool this morning, and there is actually now like an 18% chance, according to Treasury markets, that the Fed cuts rates following their March meeting. So this situation has changed drastically, and a lot of the markets are reacting. Bonds have rallied, stocks have rallied. If the money's going to get cheaper, it's good for a lot of things, but could present inflation problems, I suppose, again. So we'll see what happens. Cattle trying to recover yesterday.
Yeah, cattle futures were able to hold their ground yesterday. Feeder cattle futures closed an average of $1.52 higher. Live cattle futures closed an average of 82 cents higher. Choice box beef dropped below $300 for the first time in a month yesterday, ending the day at $298.75. That was down $1.63. Select ended the day at $271.03. That was up $1.55.
Outside market's pretty quiet this morning. U.S. dollar's up a little bit. Stocks are marginally higher. Bonds are lower. Crude oil is up 43 cents. Kind of had an ugly day again yesterday. The December WTI is 75.76 last trade. Have a great day, guys. Report at 11. We'll talk to you Friday.